From July 2025, Kenya will require a certificate of origin for duty exemptions on imports. Here is what you need to know about this new rule and how to prepare in advance. A certificate of origin, or COO, is a document that confirms where goods were manufactured. It's especially important when importing goods under the trade agreements like COMESA or East African Community. With a valid COO, you can apply for import duty exemptions. Starting July 1, 2025, KRA will make it mandatory for all qualifying goods to have valid certificate of origin. Without this document, you will not receive duty exemptions, even if your goods meet the trade agreement criteria. Why the change? This shift helps reduce fraudulent claims of origin, protects local industries, and aligns Kenya with global customs best practices. It's all about better traceability and transparency in international trade. Who is affected? If you import goods from COMESA, EAC, or any free trade agreement country, this rule affects you. Even small businesses and first-time importers must comply. What should you do? Ask your supplier to provide a valid certificate of origin, signed and stamped by a competent authority in the country of export. This could be a chamber of commerce or an official government body. Then make sure to submit it during the customs clearance process. A valid certificate of origin must include the exporter and importer's name and addresses, the port of origin, a clear and accurate description of the goods, including the quantity, and both the country of origin and destination. It must also carry an official stamp and signature from a competent authority. If you fail to submit a valid certificate of origin, your goods would qualify for duty exemption. You will be charged full import duty even if the goods would have qualified. And if KRA suspects false origin, they can seize the goods for investigation. Repeat non-compliance could also lead to fines or legal penalties. We have two key deadlines. The rule takes effect on July 1, 2025, but KRA has given a grace period until September 30, 2025 to help importers adjust. After that, no COO, no exemptions, and possible penalties. Final tips: keep a checklist of this. Valid COO from your supplier, issued by a recognized body, matches your invoice and packaging list. Start preparing now to avoid last-minute pressure. If you are also importing a vehicle or want to understand duty rates better, don't miss my next video where I explain the new KRA speed update and how to calculate import duty in Kenya. Also, don't forget to hit the like button and subscribe for more simplified tax tips, especially if you are in a business or earning from abroad.